Welcome to Author's Note. The recovery is disappointing across the developed world. Politicians are squabbling about excessive deficits, and conventional monetary policy seems to have run out of road. So, it's no surprise that there's a big debate about whether new unconventional monetary measures, also known as helicopter money, might be the way to go. This is a discussion we also have inside the walls of the FT. So today I'm joined by Chris Giles, the FT's economics editor, and we'll try to talk through a little bit the pros and cons of these helicopter drops of money that people are talking about. Chris, let's just start by looking at why conventional policy doesn't seem to be doing anything. This green line is the Bank of England policy rate, and as we see for 3 years now, it's been at rock bottom. Short-term interest rates are low, but in the rest of the economy, these are mortgage rates. Interest rates actually stay fairly high. So I think this sets the background for why people are talking about these alternatives.
Yeah, so we've had since 2009 rock bottom interest rates, but clearly that wasn't enough. That wasn't enough to stimulate the economy sufficiently to get it back to what we might think supply is. Clearly there's been an enormous break in the economy, but you want to get demand up to the level of what you think supply is, and clearly zero interest rates weren't enough. So the bank in 2009 did more, as I think we'll see.
So let's go to the next chart here. So this reflects what's happened in monetary policy after the conventional tools were used up. And this is Bank of England, but it's the same thing in other countries, big economies too. Chris, can you just explain a little bit what we see here?
Yeah, so what we're seeing here, the assets of the Bank of England's balance sheet in the red line. And essentially what this is they have printed lots of money or created lots of banking reserves, is to do it very specifically, and use that to buy other assets, mostly government bonds, pumping money into the economy, putting money into people's bank accounts, and that's what we've seen happening since it started in 2009. This is quantitative easing.
A lot of people, especially people who disagree with this policy, accuse the central banks of doing helicopter drops of money already, and they mean that to be an irresponsible thing. You know, helicopter Ben and so on is what Ben Bernanke is called. We saw that in the caricature. So isn't this helicopter money already?
Well, yes and no. I mean, in one sense it is. They have created a lot of money, banking reserves, and pumped it into the system. On another sense, no, because what they've done with that money is they've bought government bonds, which they say they can sell again.
But you could be even more radical, right? You could just print money and kind of hand it out, create reserves and give them either to the government or to the private sector. Where is the debate on that?
Well, I think that's the debate if we hit disaster zone.
Right.
If things got so bad, and there's no sense that the Bank of England thinks things are that bad, or anyone thinks things are that bad in official circles. Sometimes people in the FT think that, but then you could create money and spend it. And that money is then permanent and would either go to households and they could spend, or more realistically, what you're actually doing is giving it to the government. And it's a combination, it's an absolute blurring of fiscal and monetary policy, because the government essentially would be handing out the money.
Now here, of course, I think we have some disagreement, maybe between you and me as well. I think it depends a bit what you think about the fiscal side too. If you think that the government is right to stick to a tight policy, that is premised on there being more that the central banks can do. They can't do anything more conventional. If you think that quantitative easing hasn't really worked, then you might be more tempted. You're not. I am more tempted, I think, than you to consider, well, couldn't you create these reserves and send out the helicopters? I think you're right. There is an issue about whether this is more fiscal or more monetary. Clearly, something has to be, the framework has to be put in place to make sure that the bank, if it did this, didn't make inappropriate decisions about distribution, where it gives money, who it gives money to.
I would say you first have to decide whether it's absolutely necessary, and I think it's probably less necessary than you think it's necessary. But also I think you have to think very carefully about your exit strategy, and you might want to do this effectively if things were that bad through the government essentially borrowing more, having a fiscal stimulus, and that being financed by quantitative easing, as it essentially is now. We've got very loose fiscal policy. We're borrowing a lot, and it is almost entirely being financed by money creation. And that you can continue to do.
I think we disagree on whether more needs to be done now, and if so, what. But we do agree that we haven't run out of policy space yet, even though the new policies might be very unorthodox ones. So we'll conclude with that, and thank you very much for watching Author's Note.